All right, welcome to the Daily Money Market. My name is Che Yusuf. We are actually live in terms of the stream. Want to check it out? U.S. Consumer Price Index numbers has released.
Downside surprise
So let's go
on
in.
CPI.
The reaction in stocks is bigger right now than what I'm observing in
US
bonds, which is
February core
telling.
CPI
It's that maybe
rises
stocks are looking
3.1
for
year to
where
year,
the Fed
making
reaction or where the policy response
3.2.
might be.
All right.
Right now, the hope is leaning more to the Fed than maybe to
Fed
Washington,
Consumer Price
D.C.
Index
Joining us now is David Kelly of JP Morgan Asset Management. David, that's some good news going into next week. How much comfort will this bring the Federal Reserve?
Not really good.
Only a little. I mean, if you look at the numbers today, just scanning them, we saw a 4% decline in airline fares, which is probably, that reflects some of the things that the airlines are saying to us about some weakening in demand. But I really think that the Federal Reserve is in a very difficult position here. Until we have some clarity on tariffs, they don't know how much of an inflation kick we're going to get from tariffs this year. And until we've got some clarity on the budget, they don't know how much fiscal stimulus is going to be kicked in next year. So I still think they'll probably wait and see next week. This economy is beginning to look like it needs or will, justifies a rate cut. I do think we'll probably end up with more than one rate cut this year. I think we may end up with a sequence of rate cuts, but I think it's just too early for the Federal Reserve to make a decision, given the uncertainty about policy.
What's fascinating to me is the reaction in markets, David, the idea that you're seeing a bigger reaction right now in equities than you are in bonds, this idea that maybe the Fed could come back into play and support valuations even amid policy uncertainty. Do you buy that? Is that something that you think is a correct thesis?
Well, I think that there's some other things on the bond market's mind here. I mean, one of them is that if you look at the numbers that the CBO put out yesterday on the budget deficit so far this year, it looks like we're going to crack $2 trillion this year. I mean, we've got a massive budget deficit. And the weaker the economy gets, the more likely it is that we're going to see even more fiscal stimulus kick in next year. So we've got a deteriorating fiscal situation here, and slower economic growth and tariffs will only make it worse. So that may be supporting real yields here, even if inflation backs off a bit on weakening economic growth next year. So I think there's more than just inflation and the Fed.
Look at that, the volatility. Look at the spike of volatility. We're looking at S&P 500. Breaks to the level that it ended up yesterday, 5,639. Let's see if we can be able to reduce a little bit. Volume. So we can see S&P 500 breaks on 5,639, pushes to 5,673. New record, I think, is going to go all the way maybe to 5,781. Opportunity there, 5,781. US stated the same thing. Pushes the price all the way up. Maybe once it breaks at 42,132, we might looking for a new target, which will be around 42,671. Not that bad. It can get there. It's just around here. There's also a New York session that is coming very soon. NAS 100, the combination of 100 technology companies in the US, again, showing very, very positivity. I thought maybe it would decline a little bit, but because the data point is actually showing just a little bit of miss in terms of estimation, just with the one, because 2.8 year to year to 2.9 estimation. The Treasury erased that estimation, but the Treasury erased decline after CPI rises less than estimation. So it rise less than estimation. So that's a very, very good once the market actually rise less than the estimation. So we are preparing that the market can go to this level. Let's look at gold as well. Very strange, very strange. That means the dollar is declining, sitting at this 2,920. It might get all the way to, let's see if we go to a bigger time frame. These are some of the spaces that are indicated that it might be get to these levels. So there's this level that the market can go all the way bullish to 2,955 when it comes to gold. So some couple of pips there, but it has to break this zone of 2,926. It has to break on 926, then it will continue with a bullish movement. What else can we look? Euro USD. So everything shows a little bit of positivity of going all the way up. Is it going to retrace back? Was this just a retest? We don't know, but let's keep watching. Let's keep checking the market, keep watching the market. But for now, that's it in terms of the market analysis. And again, in terms of the CPI Consumer Price Index, just to go back again so that you can see the figures, because the figures are rolling.
And
understandably
so,
analyst
especially if you're multinational, you need clarity. So you're postponing decisions because you don't want to make a decision that ends up being a big mistake because the world has changed on you. So we are seeing business activity slow down. The second thing we're seeing is people are much more ready to pull the trigger on price increases than they were in 2021, 2022. So if these tariffs stick, and if we get more tit for tat, trade issues and things like that, then the pass through to prices will be quick, and it will come at a time when demand is softening. So then we bring the third issue, which is the consumer. The consumer is hesitant already. I take seriously what you've been saying, all of you saying about what's happening to airlines, what you're hearing from different retailers.